Hello, welcome back. We have a short week again here in the markets, but not a boring one, that's for sure. Markets are still continuing to react to the Russia-Ukraine tensions, and we're going to talk a little bit about some warnings, some things to watch out for as far as IRS scams that are prevalent here right now as we gear up for tax season. Hope everybody is having a good weekend. I'm not sure if you guys had Monday off, although the markets were closed, we were still in, but here we come into a short week, and it is crazy to say the least. It seems like these short weeks in trading are where we really get a lot of volatility lately. So we'll kind of dig in, talk a lot about what we're seeing there. My name is Steele. I am a financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of the noise along the way. So here we are, Thursday. Again, we are in a short week of trading. We had markets closed on Monday due to President's Day, but come in, to the markets opening on Tuesday, and we have seen a bit of a beating, let's call it that, as far as the markets go. Monday markets were down pretty big, and that kind of continued through the week. And what's been interesting is that, Tuesday. What's been interesting is there is just so much volatility throughout the course of the day. You'll look at the markets in the morning, they're down 1.5%. It's like you blink and open your eyes again and they're flat. And then through the course of the day, they've been kind of fizzling out towards the close. So it has been very, very volatile. And obviously a lot of speculation, I guess, mixed into this, right? I mean, what's happening right now is that a lot of those market moves are in anticipation of what may or may not come. A lot of people are trying to kind of play both sides of the fence, or play one side of the fence, I guess I should say, to get a head start on what may be ahead. I think what's really important to pay attention to when we run into these types of things, and really any macro events, right, is that it's important to understand the market typically moves faster than the news. And that may seem backwards, but the reason I say that is because the market, again, anticipates what they expect ahead. Now, they don't always get it right? So bear with me a little bit here. But a lot of this Russia-Ukraine tension, I guess where I'm going with this, may already be priced in to some degree in the market. I'm not saying that if this continues that things can't get worse, but I am saying that that is important to consider, that we've seen this pullback recently, and just because things escalate doesn't necessarily mean that the markets are going to react as if we were at highs from today, right? They may have priced in some of that already, but nonetheless, markets are certainly pulled back and kind of near where we were around mid-January here at this point as well. On top of that, we had existing home sales come out on Tuesday, I believe it was, 6.5 million, up a bit from last month and expectations. So the housing market just continues to go. And then Tuesday as well, we had consumer confidence come out at 110.5, which is great. It's maybe a bit surprising in a way, right? I mean, here we are with all this Russia-Ukraine tension and markets pulling back, and we see a good consumer confidence number. But I think what's important to know is that that is lagging a little bit. That data lags a little bit. So I'm not saying next time this is going to be a big pullback, but know that can look a little rosy when we're in the midst of this Russia-Ukraine tension situation here. But obviously that's where I want to spend most of the time here today, is just what's going on there, and kind of a state of the markets here as we kind of handle and work our way through what we're reading on the news or seeing on the news. Obviously, I think it was on Tuesday, Russia did officially invade. Now, there's not a whole lot of military action going on or anything like that, but they took that step. And so I think that's why we've seen a lot of this pullback here this week, and may continue to, right? If those things do escalate, it's very possible we see a little bit more of that pullback. However, through all this craziness, like, there are always opportunities, right? We're talking about the stock market right now. And again, depending on what happens, who knows? Maybe this is a good buying opportunity. It depends how things shake out. But on the flip side of that, through all this, we've seen commodities do extremely well, right? If you look at things like energy prices, if you look at, some of the metals, right? Some of the agricultural products, a lot of those things have gone up quite a bit. So, that's important to kind of think about. And that's why maybe diversification can be so important, is that it's not just about stocks and bonds or whatever it might be. You may want to add in or look at some of these different areas as well to help during these periods where both stocks and bonds, for instance, are really getting beat up pretty good. On the third leg to that stool, when we talk about bonds, it's important to note that through this period, we've also seen interest rates rise significantly and very, very quickly, very, very sharply. And what that means for those who know me, you've probably heard me talk about this a million times, but as interest rates rise, bond prices fall. And so what we're seeing right now is stocks and bonds kind of pulling back. But as far as commodities go, that has been kind of a glimmer of opportunity, I guess, over the past month or so, and something to definitely keep an eye on in the time ahead here. So, again, there's going to be continued volatility around this, whether there's good news, bad news, like we will see. But obviously, this isn't something that's going to just subside tomorrow. And so it's going to be something really important to pay close attention to and make some slight tweaks along the way that may be able to get you a little bit of opportunity through all this. Coming up next week, we've got income, spending, inflation, all the big numbers. Plus, next week starts jobs week. So we're going to spend a lot of time kind of gearing up for that. And the following week, really digging into the jobs data we find out next week. All right, moving into our question of the week this week. I think this is very relevant and timely as we are all preparing and starting to work on our taxes, hopefully, which is that I wanted to give kind of a quick warning of some IRS scams that are out there. We've talked about scams a few times on these Thursday updates, but obviously the tax season is where we see a lot of these things really come in, and a lot of scams baked around the IRS, claiming to be the IRS. So as this starts to get closer and closer and more of us are starting to file, I wanted to touch on it briefly and just kind of more of a warning than anything else, just kind of keep a close eye on things. If something seems fishy, make sure you double check, because these scams are becoming more and more prevalent as we get closer to tax filing date. Some of the ones that you'll see, like you may see one that says calculated your refund and maybe requires you to fill out a form or something like that to get the information. Some may require you, believe it or not, to pay a small fee in order to get like a stimulus check or some sort of refund to you or something along those lines. Those ones are maybe a little more obvious, right? If you're required to pay a fee to get money from the IRS, double check that. There's probably something going on there, right? However, there are a lot that are also very well disguised. There are maybe letters or calls saying that you owe a particular amount for your taxes in the current year or previous year or even further back. And a lot of times what they do, as you might imagine, is they will put a very strict timeline on when you need to pay that and when you need to get back to them. Obviously, the IRS has timelines and they will require you to pay them quickly. But generally speaking, if you hear or see something that really puts a hard timeline on something and there's a lot of this urgency to pay them right away, that is something worth looking into a little bit further to just double check and be sure that it is in fact the IRS that is requiring it and that you do in fact still owe that money, obviously. So hopefully that's helpful. Obviously, taxes are on a lot of our minds here now, and hopefully none of this comes to you. But as a heads up, if you do see something a little bit fishy, always good to double check and be sure that it is in fact the IRS reaching out to you for any information or money or whatever the case might be. Thanks as always for joining us. We'll see you next Thursday. A ton to cover then. So keep a close eye on the markets in the meantime, but we will catch you up on inflation, spending, income, and jobs all next week. So we'll see you next Thursday at 3. Have a great day and stay warm.